Imagine waking up tomorrow and realizing that the people you love most, your spouse, your kids, your parents, are suddenly left to face all your financial responsibilities alone. The house payments, school fees, daily expenses, everything that depended on your income is now a heavy burden they never expected to carry. It's a painful thought, isn't it? But this is exactly why life insurance exists. Most people think life insurance is something to worry about later in life, something for the old or the rich. But here's the truth. The earlier you understand it, the more it can protect your family, your peace of mind, and your legacy. The sad reality is that nearly half of Americans either don't have life insurance or don't have enough. And yet, every day, families are saved from financial devastation simply because one person planned ahead. Hey everyone, I'm Bobby, and welcome to this video. Today, we're talking about one of the most misunderstood but powerful financial tools in the United States, life insurance. Whether you're just starting your career, raising a family, or planning for retirement, understanding life insurance is one of the smartest steps you can take toward real financial security. Over the next few minutes, I'm going to break it down in simple, human terms. We'll talk about what life insurance really is, the different types available in the US, how it works, and how you can choose the right plan for your needs and budget. By the end of this video, you'll see that life insurance isn't about fear, it's about love. It's about making sure that, no matter what happens, your family's dreams continue, your kids' education stays on track, and your hard work keeps paying off even when you're not there. So, stay with me till the end, because I promise, after watching this, you'll look at life insurance in a completely new way. Life insurance is one of those topics we all hear about but rarely take the time to understand. At its core, it's simple. Life insurance is a financial agreement between you and an insurance company. You pay small, regular amounts called premiums, and in return, the company promises to pay a lump sum of money, called a death benefit, to your family or chosen beneficiaries if you pass away. It's a safety net, not for you, but for the people who depend on you. Think about what would happen if your income suddenly disappeared. Could your family keep paying the rent or mortgage? Could your kids still go to college? Would your spouse have enough to live comfortably? Life insurance exists to make sure the answer to those questions is yes. It's not just about death, it's about protecting life, the life of your loved ones and the future you've worked so hard to build. Many people believe they don't need it or that it's too expensive. But here's the truth. Most people can get meaningful coverage for less than what they spend on coffee every week. The earlier you buy, the cheaper it is. Life insurance also brings peace of mind, knowing that even if something unexpected happens, your family won't be left struggling financially. It's not a luxury, it's an act of love, responsibility, and foresight. It turns uncertainty into protection, fear into peace, and loss into legacy. Now that you understand why life insurance matters, let's look at the main types available in the United States and what makes each unique. The most common one, and often the best starting point, is term life insurance. This is straightforward coverage for a fixed period, usually 10, 20, or 30 years. If you pass away during that term, your family receives the payout. If the term ends and you're still alive, the coverage simply expires. It's simple, affordable, and great for people who want protection during key life stages like raising kids or paying off a mortgage. Next is whole life insurance, a lifelong policy that never expires as long as you keep paying the premiums. It also includes something called cash value, which grows slowly over time, almost like a small savings account inside your policy. You can borrow against it or even cash it out later. It's more expensive than term life but comes with lifelong stability and some financial growth potential. Then there's universal life insurance, a flexible version that lets you adjust your premiums and death benefits as your financial situation changes. Some types, like variable life insurance, let you invest the cash value portion in the stock market, offering potential growth but also risk. To simplify, term life short-term affordability, whole life equals long-term security, and universal or variable equals flexibility and investment options. The right choice depends on your goals, whether you want basic protection, wealth building, or both. What's most important is that you understand the differences and pick the one that fits your lifestyle, not just your budget. So, how does life insurance actually work behind the scenes? Let's break it down step by step. First, you decide how much coverage you want and for how long. For example, You might choose a $500,000 term policy that lasts 20 years. Then you apply with an insurance company, answer a few health questions, and sometimes take a short medical exam. Based on your age, health, and lifestyle, the company calculates your monthly premium, the amount you'll pay regularly to keep your coverage active. Once your policy is active, you start paying premiums. If something happens to you while the policy is in force, your beneficiaries, usually your spouse, children, or anyone you name, receive the full death benefit tax-free. They can use that money however they need, paying bills, clearing debts, or funding education. If you outlive your term policy, the coverage ends, though many companies allow you to renew or convert it into a permanent plan. In whole or universal life insurance, part of your premium goes toward building that cash value we mentioned earlier. It grows slowly over time, and you can borrow from it while you're still alive. But remember, loans or withdrawals reduce the payout your family receives later. The key takeaway is this: life insurance only works if you understand and maintain it. Missing payments or ignoring policy updates can cause it to lapse, but when handled properly, it becomes one of the most dependable financial tools in your entire plan, quietly working in the background to protect the people you love most. Choosing the right life insurance can feel overwhelming, but it doesn't have to be. Start by asking yourself one simple question: if I weren't here tomorrow, how much money would my family need to maintain their lifestyle and pay off existing debts? That answer will guide your coverage amount. Most experts recommend a policy worth at least 10 to 15 times your annual income, but it can vary depending on your situation. Next, compare different types of policies, term, whole, and universal, and decide which fits your goals. If you just want affordable protection while your kids are young, term life might be perfect. If you want something permanent that builds value over time, whole life or universal life could be better. Always check the company's reputation and financial stability. You can research insurer ratings on platforms like AM Best, Moody's, or Standard & Poor's. It's also smart to get quotes from several insurers, either through an independent agent or online comparison tools like PolicyGenius or NerdWallet. When reviewing policy options, look for additional features called riders. These can include benefits like critical illness coverage, accidental death coverage, or a waiver of premium if you become disabled. They might cost a little extra, but they can add valuable protection. And finally, read the fine print. Understand when and how the policy pays out, what's excluded, and what happens if you miss payments. A great policy isn't necessarily the cheapest, it's the one that fits your family's needs today and tomorrow. Taking the time to choose carefully ensures that when life changes, your coverage changes with it. Now let us clear up some of the biggest myths and mistakes people make when it comes to life insurance. The first myth is, I'm too young to need life insurance. In reality, that's exactly when you should get it. The younger and healthier you are, the lower your premiums. Waiting until you're older, or have health issues, can make it far more expensive or even impossible to qualify. The second myth, I don't need it because I'm single. Even if you don't have a spouse or children, life insurance can still cover funeral expenses, outstanding debts, or help support aging parents or siblings. It's not just about family, it's about anyone who could be affected financially by your loss. Third myth, my job provides enough insurance. Many employers offer group life insurance, but it's usually limited, often just 1 or 2 times your annual salary, and it disappears when you leave the job. Having your own personal policy ensures your protection travels with you, no matter where you work. Another mistake is focusing only on price instead of purpose. Yes, cost matters, but the cheapest policy might not offer the coverage your family truly needs. Always balance affordability with reliability. And finally, the biggest misconception, life insurance is complicated. It can seem that way at first, but once you understand the basics, protection, duration, and cost, it's surprisingly simple. The goal isn't to buy the fanciest plan, it's to buy one that does its job when it's needed most.